Ladies and gentlemen, welcome back. This is Christopher Aaron. By the time you see this, it will be April 23rd, 2021. Happy Friday around the world. I promise you two things about the video you are about to watch. Number one, some people are going to be offended by it. And that's just the way it is when you're talking about controversial subjects. And the second thing that I promise you is that you will get the honest, independent analysis that this channel has become known for, nothing more and nothing less. Okay? Nothing you see here will be published because we're being paid to say one thing or another by any sponsor or any company. No. So when we get into this week's topic, gold, Bitcoin, I know, and the gold miners, and you might be thinking, well, what do these three things have to do with each other? Quite a lot. Just know you're going to get the hard, honest analysis of what is going into our investment decisions here, and then you will have to decide what to do with that information, but we will not be holding back here, okay? Before we go any further, make sure to hit the red subscribe button so you get notified, and also hit the bell icon so you get notified when these videos are published. So you might be saying, okay, what do these three things have to do with one another? Well, clearly gold and the gold miners, there's a relationship there. But what about Bitcoin? And I've stuck it here in the middle of these three things. The thing that these three asset classes have in common is that they are all anti-fiat assets to some extent, right? Gold supply is extremely limited. Bitcoin, the supply is limited. And proponents of Bitcoin say that cryptocurrencies and Bitcoin in specific are the sort of modern version, the 21st century version of gold. We could debate that, but that is basically the claim for the cryptocurrencies. It's the enhanced new version of an anti-fiat asset, right? And then, of course, the gold miners are the companies that dig the anti-fiat asset out of the ground. If we could say one thing is that gold is more stable in value, Bitcoin is extremely volatile, and the gold miners are extremely volatile as well. And so we have more stability here, but also less reward. You know, gold is probably not going to double within the next year, whereas Bitcoin and the gold miners can double or fall by 50 or 85%, in a given year. Extreme volatility, right? So in sum, what do these three things have to do with one another is that they are all anti-fiat assets. Now, the reason that we are going to talk about these a little bit closer is because I believe what is setting up here when we get to the Bitcoin chart is a significant decline in Bitcoin coming throughout the rest of this year, which, if you think about Bitcoin as sort of the hyper speculative form of gold, and then we just said, what is the other more speculative form of anti-fiat assets? It's the gold miners. What I think is about to happen here, the summary takeaway, is that I think an exodus is about to occur out of the cryptocurrency market, and it's going to be finding its way into the other more speculative form of the precious metals market, which is the gold and the gold miners. Don't believe me? Well, take a look at the data, and then let me know what you think in the comment section. First, we're going to talk about gold, and always we will do it with the charts. So the big picture perspective here is that it looks like this downward falling wedge, this bottoming wedge here, it looks like this is getting ready to break upward. Now, if you have not watched the last two videos, you will know why we are looking at those leading signals. And we have a lot of evidence, a lot of leading signals that we've been following that are showing us that gold is set to break this primary downtrend. I suspect it may not happen, today or tomorrow. There might be a couple more days here of grinding right along the actual line. And then gold should be breaking this 9-month downward channel here within the next couple of days. After that, we should get a break back into the mid-1800s, followed by a retest of this 1800 level, followed by an advance up to the dashed black line here representing the former 2011 peak. Most likely a back off from that point before at some point, notice we're talking about mid to late 2022 here, that we get back to the former high. And I do not think that gold will break through the former high immediately. I think it'll back off one more time. And probably just when the media starts coming out and saying, see, gold failed to break above 2,000 again, or failed to hold above 2,000 anyway, after a bit of consolidation is when gold will finally do that for good, when it convinces most of the mainstream that it's never going to stay above 2,000. And then we'll start talking about how will gold be moving its way into the 2,000s and significantly higher targets after that. Let's take things one step at a time, right? This is how things are shaping up for gold. Remember, we have very strong leading signals as per the expectation that gold will be breaking this downward channel upward. As I said, if you have not studied the leading signals, go back and watch the last 2 videos with us. We spell it out all there. This is the expectation for gold itself. Now, let's switch over and look at Bitcoin here. We're looking at Bitcoin over the last year or so. Some serious technical damage has been done here to the Bitcoin chart. This is a horrific looking topping pattern that is shaping up here in Bitcoin. And again, I said, I know I will offend some people here. People don't want to hear that. People think Bitcoin and cryptocurrencies can only go higher, right? They only move higher. Well, I believe you're in for a rude awakening here. We see a significant wedge. You can see in the light dashed lines here, a wedge break right there. This is the beginning of the topping process. And just for reference, I did post, if you don't follow our account on Twitter here, I just want to reference this. April 16th, 1 week ago, when Bitcoin was trading at 60,000, I posted this here saying, wait for it, major terminal wedge top is almost ready. You were warned, right? With Bitcoin trading at 60,000, almost 60,500, where is Bitcoin now? Over 10,000 lower, just 1 week later. I mean, here's the tweet. Look at where my mouse is. April 16th, right? Here we are. It's April 23rd, 1 week later. This tweet was posted right in here at 60,000, and now we're down here. So not only have we broken the wedge, as I was anticipating in this post, there is a reason to follow these technicals, you can see. Not only have we broken the wedge, which is the beginning of the top, we have now broken the quite significant rising trend here from December. You can notice these lows, this low right in here, both of these lows in early 2021. It bounced here 4 days ago and sliced through just now as we're speaking. So 2 rather significant trends have been broken. So what can we say for Bitcoin? Where is our support level that we're watching for? There is moderate support now here for Bitcoin in the region of 40,000 to 44,000, these black dashed lines. You can see a bunch of these highs, right where Bitcoin took off here back in February, and you can see a lot of these lows matching up here, forming this moderate support region. There's also the 61.8 Fibonacci level of the entire advance out of some of the former lows around 10,000 from back last year up through the recent high just above 64,000. The 61.8% Fibonacci level comes right in there too. So there's a whole cluster. This is, let's call it a moderate support level. So, at the very minimum, this analysis is strongly suggesting that Bitcoin is coming down at least another $10,000 lower, down into the 40,000 range, 40 to 44,000 here. It should look something like this relatively quickly here over the next couple of weeks. From that point, I think we are going to get something of a bounce in Bitcoin. However, I do want to tell you that this This moderate support region here is simply that. It's really only moderate. This is not a long-term support level at all. The long-term support for Bitcoin is all the way down here in the 10,000 to 14,000 range. And so what I think is going to be setting up here for Bitcoin is after we get something of a moderate bounce in this support zone, and basically most people are convinced that the bull market is again underway, I think Bitcoin will be rounding out again and then decisively breaking this moderate support all the way to the long-term support level. A lot of people, don't think this is possible. I mean, look, guys, you just have to go back in the history of Bitcoin and you look at the previous cycles. Bitcoin has a fairly reliable pattern of, in its bear markets, losing anywhere from 80 to 90% before bottoming out. So this would be something like like an 80 to 85% loss here. This is very typical for long-term cryptocurrency cycles. And after that, we can talk about, does this represent the long-term bottom where you get another couple years of basing before another bull market, or does this represent, let's say, the pathway towards zero? I'm not going to talk about my long-term views of cryptocurrencies here too much. I have talked about that before in the past. I'm going to leave it at this right now, which is to say, even if one thinks that Bitcoin is eventually going to 100,000 or a million, it's very typical to have 80 to 90% declines even within a bull cycle for cryptocurrency. And it looks like that is what is setting up here. I would place a very strong likelihood that Bitcoin falls at least another $10,000 and a significant likelihood that it comes all the way back into that 10 to 14,000 range. And just remember, these red arrows are for suggestions. We are not trying to say that it's going to take this exact timing. This could take a significantly longer period of time than, let's say, July, but this is to give you it all in one chart where we think the price is coming down to. So what does this have to do with gold and the gold miners? Well, if gold is breaking out as we're speaking, and we have those leading indicators from some of the stocks that we've been following here, as I said, go back and watch the last two videos to know what we're talking about, especially with wheat and precious metals. If gold is going to be breaking out and Bitcoin is breaking down to some extent, think about what that means as far as speculation in the anti-fiat crowd. Remember, we talked about that Bitcoin and the cryptocurrencies are similar to gold in that proponents understand the case against Federal Reserve notes, let's say. They understand the case against central banks, right? Whether you're in favor of gold, Bitcoin, or both, you understand the problems with fiat currency. It's just being expressed in a different way with Bitcoin versus gold. And so if you understand that the people that are moving, let's say, not only into Bitcoin, but let's talk about some of the more speculative altcoins, Ethereum, and then especially Dogecoin, and you get into some of the other coins, Ripple and Golem, and a good friend of mine has just made a small fortune on that pirate cryptocurrency. And I always say, this is the other thing, guys. I don't care if people want to invest in cryptocurrencies and they make a fortune. I say congratulations, right? I'm not like one of these people that's here being jealous about cryptocurrencies. I have found a way of investing that works for me. I don't need to get involved in cryptos because I've found something that consistently works for me to make profits. But if you've done well in cryptocurrencies, once again, congratulations. But the chart for Bitcoin looks horrific right now. And so that chart looks like it's going to be coming down strongly. And so if you back to the original point, which is that if the speculative anti-fiat investor is going to be fleeing the crypto space over the next several days, weeks, months, maybe even a year or two, where is that more speculative anti-fiat investor going to go? If the cryptos are losing value, where are they going to go to express, hey, we want to vote against fiat money, but I want to try to hit a home run at the same time? What is shaping up here is a massive, I'm talking massive 8-year stage 1 base in the relationship between the gold miners to their very own product. This is a ratio chart. And what this is showing us here is that we are just, how many times, you go back here from 2013 through 2014, you had a number of hits on this level here in the 0.08 to 0.09 level. Understand what we're saying. The higher this chart goes, the more the gold miners are outperforming the price of their very own metal. The lower this goes, the better gold is doing relative to the gold miners. Now, this ratio cannot go to zero, but this data point here in 2016 was the closest to zero that it had ever been. Ever. This was the least that the gold miners had ever been valued relative to their very own product. So for something to fall by 80, 90%, that can't go to zero, and now it's moving sideways for 8 years, guys, this thing is getting ready to break upward in favor of what? The gold miners. So, I'm bullish on gold. The chart for gold looks very good. But what this chart is saying is that the gold miners are going to be strongly outperforming the price of gold with leverage to the upside as soon as this thing breaks the stage 1 base resistance level here, 0.08, 0.09. The initial target will be 0.14, but I want to zoom this out for a second and look at the big picture. I show this to our premium members sometime, but the reason I'm showing this now for free on the public YouTube channel is because, by the way, we were just looking at this little box right in here. But if you look at the normal historical valuation range here for gold miners relative to their own product, this is all of the available data that we have. Going back to 1984, the inception of the XAU index, this is basically like the GDX, except this goes all the way back to 1984. You've got almost 3 decades worth of a historical normal valuation range. Remember, this thing broke down in the crash of 2008 as capital froze for mining products. It recovered for about 2 years, but then the problem for the gold mining sector is that gold itself topped in 2011 and then gold declined for 5 years. So you had this ratio between the companies that dig for gold and gold itself reach a totally absurd generational bottom. The gold miners being the cheapest that they have been in 40 plus years. And we just showed, look at what is happening here. We've already broken the best fit downtrend. This is getting ready to break the stage 1 base above this black level, 0.08, 0.09. And we have that initial target here, which should be met relatively quickly as soon as we break 0.9. But I'll tell you what, this target is not going to be the final stopping point for the gold miners relative to the price of gold. I think we're going to get back up to what was former support here in this 0.16, 0.17 level. We will back off from there for perhaps a couple of years. This could coincide with, let's say, a correction in gold from, I don't know, can you imagine, 3,000 gold back down to 2,000 gold? That would be a pretty severe correction. I think that will be coming in the middle part of this decade. And then this ratio will go and begin to revert back to its historical normal valuation range. We have 3 decades of data supporting that. I think this is going to end up being just a huge anomaly, a huge undervaluation period here as this thing works back toward this range. And the key takeaway here is that from the current level of 0.08 to, let's say, 0.24 back into the historical normal valuation range represents a 200% gain for the average gold miner, this is the key, with zero increase in the price of gold being required. That's what this ratio tells us here. Guys, this is huge. We're right at the verge of seeing the initial shot higher in this ratio. It's coming, mark my words. So can you imagine, if this is what's going to happen with no increase in the price of gold, can you imagine if gold itself doubles? These miners are going to be up 400, 500% in this process for the average gold miner. And then some of the more speculative gold miners are going to leverage even those gains. I know this sounds crazy, but you look at the data. You look at this being the cheapest valuation for the gold miners in 40 plus years, breaking downtrends, getting ready to break out of this stage one base. Bring it back to Bitcoin. Now, this is where the story gets really interesting. I've been following this chart here for the last 10 years or so, watching and wondering what is going to cause this ratio to start reverting back toward the mean. And in studying Bitcoin here, that chart that I showed just in the last slide of that terminal wedge pattern in Bitcoin, that I called out at 60,000 and said, guys, watch out if you're in Bitcoin, a top is coming. What has dawned on us here over just the last week is that what is going to cause this gold miners, in other words, the speculative ratio, the speculative aspect of the gold market to begin outperforming gold itself is going to be the exodus of capital from the speculative Bitcoin and cryptocurrency market to the other way to achieve outsized gains when you're looking for an anti-fiat, an anti-central bank investment theme. The other way to get those outsized gains is going to be in the gold mining and, of course, the silver mining complex. So it's the exodus of capital that we're already seeing from Bitcoin. It's a real ugly looking pattern right now. Look, could there be, could something crazy happen and the top is not in yet? Sure. No analysis is 100%. One thing that we can say for 100% certainty is that this ratio cannot go to zero. Ratios of real asset classes cannot go to zero. That is one of the powerful things about ratio analysis. So anytime you see something where a ratio between real assets is approaching zero, you get that little bell that should be ringing in your head saying, hey, from a value perspective, if I'm a value investor, I want to be looking at things that are the closest to zero that cannot go to zero. And then you get a decade or a 2-decade reversion to mean, and you become very wealthy as you just wait for assets to be appropriately valued, let alone getting overvalued. Can we imagine that? Major gain in the gold miners is coming, and it is going to be coming from the exodus of the cryptocurrency market. There, I said it, let it sink in, agree or disagree, but this is what the data shows. If you would like to learn about the exact gold miners that we are buying and selling right here, along with more analysis on not only gold, but silver, the US dollar, you want to talk about the problems with the fiat system, we are tracking the US dollar like a hawk right now. The stock market, the rest of the commodity complex, because I'll tell you this, it's not only going to be gold and silver, it's going to be most tangible assets that benefit as the fiat assets are declining. We also cover the GDX, and these flash updates go right to your inbox whenever we make a decision here. As I said, you get members-only videos just like you're watching right now, but they tend to be 45 minutes to 75 minutes in length, once per week, 50 weeks per year. It's called Precious Metals Intelligence. I cannot fathom navigating this coming breakout in the gold miners without this intelligence to guide you and to be there with you. This could be a lonely place if you're trying to invest in this sector completely alone. So we're here for you. And this is simply the information that we are using here to make all of our decisions. And I know it's helping a lot of people. If you would like to speak to me one-on-one, Christopher Aaron, please know that you can do so in voice and email consultations, either on the phone or Skype or however you want. Remember, I do not take any funds from either the gold miners that we are investing in, any of the funds, nor do I take any funds from any of the crypto guys, even the stable coins, even the gold-backed coins. Trust me, I have a lot of people wanting to advertise on this channel and wanting to subsidize this channel. I don't allow it. Why? Because I feel like keeping my independent voice is more valuable than any short-term amount that these companies are going to pay me. So you get the real deal here on this channel. Thank you for being here. Thank you for those people supporting this channel on Patreon. That means so much to me. Once again, make sure to hit the subscribe button. Watch that Bitcoin chart, right? I mean, in the last week since I published that tweet, it's already come down from 60,000 to 50,000. I think within the next week or two, it's coming down to 40,000. Then I think we're going to have something of a bounce. It's going to convince most people that the correction is over. I'm very skeptical that it's going to be over at that point. And it should be the exodus here from cryptocurrencies looking for another way to express the anti-fiat investment theme, but looking for multiple rewards over the price of gold itself that is going to cause that breakout in the gold miners to gold ratio. Watch for it. See you guys soon. Take care of yourselves. Stay healthy.